Hey, I'm Adam Jusko from ProblemMoney.com, and in this video we are going to talk about why credit card limit increases may be a bad thing and why the banks keep giving them to you anyway. But before we do that, I'm going to ask you to please subscribe to this YouTube channel if you have not already, and if you have already, I thank you for doing so. So one of the questions that I get from time to time is, why is my bank giving me an increase on my credit card limit when I don't use all that much of the limit that I already have, and I didn't ask for any increase? They're just giving it to me without me even wanting it. Why would they do this? Now, some of you may be sitting here watching this video and you have very small credit limits and you're thinking, well, this has not happened to me. Well, I will tell you, if you play your cards right and you make your payments on time, over time, the credit card companies are going to give you higher credit limits even if you don't ask for them. So why do they do it? And the answer is this: the credit card companies know that when they increase your credit line, you are more likely to use more of that credit line even if you are not using the full credit line before. In fact, there was an interesting paper a couple years ago that came out of the Federal Reserve of Boston that showed, on average, people would use the same percentage of their credit lines regardless of what that credit line was. So if the credit line went up, they would continue to have sort of the same credit utilization rate. If that credit line went down, they would continue to have that same credit utilization rate. So what that means is, if you are someone that had a $2,000 credit line and you tended to carry about a $1,000 balance, if your credit card company came to you and said, we are going to increase your credit line to $4,000, it is likely that over a fairly short period of time, your balance would become around $2,000 on that card, because you had sort of settled into a 50% credit utilization ratio. And that is what happens to people when their credit lines go up. They tend to carry more of a balance, especially if they are people that are already revolving debt. They kind of get to a place that is their comfort level, I guess you might say, with how much debt they're willing to carry on that credit card, and they just keep that same utilization ratio as the credit limits increase. But of course, looking at the example I just said, if you had a $2,000 credit line and you were carrying $1,000 of debt, that's 50% of your credit line. But if they double your credit line and you double your debt, in the meantime, that means you have $1,000 more of debt, even if your utilization is the same percentage. Now this works in the reverse too, which I found pretty interesting. Back in 2008, 2009, when there was a big financial crisis, the banks started slashing credit limits, cut them around 40%, and what they found was that people paid off more of their credit cards when their credit limits went down. So again, say you were used to having around a 50% credit utilization ratio. In that case, when your credit line gets cut down, you would simply pay off more of it instead of letting it sit on that credit card in order to get yourself back down to that 50% utilization ratio. So again, using the example I said, if you had a card with the $2,000 limit and you were sitting with a $1,000 balance, if you had that slashed down to a $1,000 limit, you would pay off $500 of it and get yourself down to $500 out of that $1,000 limit to stay at that 50% ratio. Now, one of the other interesting things from that 2017 study was the fact that you tend to have a large increase in your credit limits between the age of 20 and 40. In fact, they said you have, on average, a 700% increase in your credit line between those two ages. Now, it continues to go up beyond 40, but not as quickly. So what 700% means is 7 times the amount that you would have had at 20, you're going to have at 40. So again, if we use the example that we were just talking about, say you had a $2,000 credit line when you were 20, by the time you were 40, that credit line would likely be $14,000, assuming that you had been making payments along the way and your credit card company had been, treating you well. Now, if you're someone that tended to revolve your balances and sit at that, 50% utilization ratio that we were talking about, when you were 20, you might have $1,000 worth of debt on a $2,000 credit line, but when you're 40, you might have a $14,000 credit line and have $7,000 of debt, keeping yourself at that same 50%, but then obviously having much more debt in real numbers. Now, another of the findings is that people that carry credit card balances are more likely to be people that have less of a cushion financially. They don't have a lot of savings, and they tend to look at that credit line that they have as sort of being part of their wealth, because they can draw on that credit line if they need to. They can let a balance sit on that credit card, and no one is going to, come and demand the money from them. They only have to make those minimum payments every month, right? So they tend to look at it more as a piece of their wealth. Now, where people, on the other hand, who pay off their credit cards every month, they simply see it as a convenience. They don't look at that as being more money that they have. They just see it as a way for them to, conveniently buy things, and then they just pay it all off when the bill comes. The authors compared these credit limit increases to being sort of like a tax rebate. When you get a tax rebate and you don't have much of a financial cushion, you are more likely to spend more of it. It is more likely to feel like found money that you can then spend, where also when you get a credit line increase, it feels a little more like found money. You now have more money that you can draw on, even though technically it's not your money, it's the bank's money. You still have more buying power, and so people that don't have as much of a cushion are more likely to take advantage of that greater buying power and then get themselves into further debt. And so, of course, that's a double-edged sword, right? It's probably nice to get those credit lines and feel like maybe you have a little more cushion in your life. But of course, the opposite side of that is you are doing it with someone else's money, and you are paying interest every month in order to do it. So that means that someone that has less of a cushion is essentially using their credit cards as a way to get a cushion, but it means that they're paying 15 or 20% more for the same goods and services as the people that are paying off their credit cards every month. So bottom line, the credit card companies know that if they give you higher credit lines, you are likely to use more of that credit line. So if it happens to you, you get one of these automatic credit line increases, then you should either think to yourself that your mindset should stay the same and the fact that you're not going to spend any more on that credit card than you would have before, or if you don't think that you can keep that mindset and you see yourself starting to spend more and keeping more on the card, that is the time to call up the credit card company and say thank you, but no thank you, and have that credit line reduced so that you can keep that debt into a place that feels manageable for you instead of having it slowly ratcheted up. Now, obviously, it would be great if everybody paid off their credit cards in full every month, and that's generally what we talk about on this channel, but not everyone does it. So when it happens to you that you get that credit line increase, think to yourself, am I going to use more of it, or can I deal with it as it is? Because it can be a positive. If you get a credit line increase and you don't take on any more debt, then you actually are going to help your credit score because you are using less of it. You have a lower credit utilization. But for many people, as I've just laid out, they're going to use the same amount of whatever that credit line is. So you need to know yourself and figure out what to do accordingly. So that's it for this video. Have you seen this play out in your own life? Have you gotten those credit line increases and seen yourself start to spend a little bit more because of it? Or have you been disciplined and taken those credit line increases and just used them in order to help your credit score improve and help that credit record? I would love to hear all about it in the comments section below. Otherwise, I thank you for watching, and as always, please go to proudmoney.com where we do credit card reviews. We talk personal finance, we talk deals, and all sorts of other fun stuff too. Thanks for watching. Bye.